Welcome everybody to a Sunday edition. So I didn't want to make this video, however there is some breaking news, and so I want to inform you guys as best as I can. I basically give you my opinion, so please know that this is not financial advice, and I'm also not a lawyer because this video will be quite technical, but stay tuned for that. I think there's lots to unpack and lots of information, and if you appreciate that, then please smash a like and subscribe if you haven't yet. I really hope that this could help the channel to finally grow to 50,000 subscribers. Wouldn't that be something crazy and good, huh? Now, let's dive into that. The news here is NIO announced 3.3 billion investment in NIO China from strategic investors. So, obviously, I already read some of the social media commentary about that. The shorts are celebrating. Those who are hating on NIO stock think that this might actually help their narrative that NIO once again is cash strapped and they will need new money, and now it's finally happening. And so, you know, they are looking forward to jumping on doubling down on their shorts. And NIO investors are out there and concerned whether or not this is dilutive, and, you know, we just started a run. Will this break the momentum or not? So here's my opinion on that and why I think it will actually not help the shorts narrative. Stick till the very end. I'll explain in very detail why I think that's not the case. So in my Patreon community already done a quick take in the morning. I'll walk you through these points bit by bit. As I said, there's lots to unpack. First question, is this dilutive to NIO ADR investors in the US? My take, no, it's not. The share count doesn't change. So in order to explain that, let's bring up the NIO organizational chart here, where you can see up there is NIO Inc., the NIO Cayman company, which is kind of a holding company. So it's holding investments or direct relations with all of these companies below that. So each of these boxes is another company. For example, here NIO Germany GmbH, so that's a limited company in Germany, right? All of that is consolidated under this company which we are invested in. This is the company that is listed at the stock exchange, and where we own a share in that with our shareholding, okay? Now, the news today is not about this company. The news today is about this company. This is NIO China. As you can see, there's onshore and offshore. So onshore is mainland China. Everything you see below this dashed line is actually in mainland China, and these are Chinese companies. This company here has now attracted new investors and is issuing new shares. But as I said before, here for the US company, the share count stays the same. So if you are a big fish and a big whale and you own 5% in your stock today, tomorrow your stock is still the same. So you still have the same piece of the pie of this overall pie here, I would say. So what has changed though is underneath, like one of these companies has made some changes, and I will tell you what I think the impacts are and why, importantly, they're doing that. So, but first of all, no, it's not dilutive to us as ADR investors. However, if you're a NIO China investor, then it's dilutive. So if you are owning a piece in this NIO holding in China, then suddenly there are new investors now. So there's these investment holding names. These are all complicated fund setups. Essentially what they are local government funds that are already invested in NIO China since the Hefei deal, and now they are taking a bigger share. So they're now putting down 3.3 billion in investment in order to gain a larger stake. And in result, what has changed is in the past, NIO has owned, the holding company has owned 92% of the NIO China entity, and is now down to 88.3% of this shareholding. Basically because the other investors, they came in and they bought some of these newly issued shares under the hood, right? So that's what has changed, and with that, what we can see is that this has changed over the past. Before, if you may this may come up, and if you're a long-term NIO investor, you may remember that NIO did the Hefei agreement back when they are almost bankrupt in 2019, 2020, so a whole different situation. And back then, the Hefei local funds, they stepped in. They gave NIO, what was it, around 17 billion RMB, no, that's the worth of the assets, 7 billion RMB. And over time, first they acquired with that 24% of a stake. But over time, now NIO actually used funds to buy back a stake. So this is why NIO was currently owning 92.1% back of this NIO China company, because they have used some of the proceeds of previous raises in order to acquire more of this NIO China from these investors back when they noticed that the business is recovering, when they noticed we're not at risk of bankruptcy anymore. So that was this genius move of the Hefei initial deal, and since then these stakeholders are on board, okay? And so what's happening now is that they are basically doubling down again and wanting more of that pie again in order to also fund NIO's China operations there. So this is bringing us to the question of why is NIO raising that money, and also to the first explanation why I think it's actually not helping the short narrative here. Because, NIO is currently not cash strapped. So NIO currently has, let me see, what was the exact number? The cash position in the last report, 5.7 billion USD in cash, right? So these are USD resources, and they can use them to fund operations and so on. But it means that they're not cash strapped right now. So the question is, why do they raise money if they don't actually need the cash right now? First of all, this means that the company is not in financial distress. And this rather leads me to the interpretation that it's rather the stakeholders, the Hefei government and those local government funds, Anhui and so on, that they want a bigger stake in the NIO local operations. And I think this may have something to do with the backdrop that China just issued ways of funding buybacks and increases in company ownerships through state banks, and also through issuing liquidity that can tap into and therefore allowing a bigger stakeholding in general in private companies. And this was one of the big news that has fueled the China rally in the last couple of days, because basically it means banks and funds and so on can tap into cheap money in order to buy up stocks and shares and so on. And maybe that's one of the reasons why these investors are now saying, oh, look, there's liquidity out there. I want to own more of this company, and I have the money now, and I buy more of the stakes. So I think that could be one reason behind why they're doing it now. Another interesting part is that they're doing it now before the actual outcomes of the Onvo launch, and maybe also before a couple more delivery targets are being met in the next couple of months and weeks. So maybe they also have a kind of a sentiment that something bigger is happening in the foreseeable future, and that this could actually also fuel the stock price. So they want to go in now, before maybe something happens with the stock later. So maybe the company becomes more expensive as well, or also maybe leading up to what could be a potential China IPO of this NIO China entity. So what could happen at some point if they meet basic requirements, for example, also profitability in China for some time, and other requirements, they can list at the so-called Nasdaq of China, and then could make an IPO. And with an IPO, it's always the early investors who make money. So if they have a larger stake before IPOing at some point, then it rewards them at some point in time. And the Hefei government has been quite smart about this deal. Like, everybody is now talking about the Hefei deal. It has become a term in venture capital, really, how good this deal was set up in the past. And one other real motivation here could be, if we look at the production, hubs in China. So here's also Shenzhen, Shanghai, Xi'an, Changsha, and so on. So you can see how big of a jump Hefei is making here for the 2025 production targets. So Hefei really wants to become a big player in the Chinese automotive industry. And, how can they achieve that? Well, through helping their local companies and also being a part of that as an investor. So these are some of the, reasons behind that, why I think this cash raise is happening. Not so much because NIO needs the cash, but because of these topics that I just mentioned. Now, is this a second Hefei bailout? No, I don't think. It does have some similarities because the stakeholders are pretty much the same, but as I mentioned, the shareholdership of these stakeholders has changed over time, back and forth. So what it could make it the same is in the future if NIO stock were to rise and NIO might actually start issuing debt or stock in order to use proceeds to buy back again some of the NIO China stakes, right? What we've seen in the past after the Hefei deal was unleashed, the stock quickly got up to 60 USD and such. You've seen that, and NIO raised some money at that point, and some of the proceeds were used to buy back a bigger share in NIO China. So they might want to do that again. However, I'm not entirely sure whether or not that's the real goal, because we're going to talk about that in a second. We don't really know how the stock market will really react to this news. But it's a possibility, right? It could turn into a Hefei agreement deal 2.0, but currently I don't see it. I think it's now more of a more operational, more hands-on kind of deal. Like, look, I want to own more of that, and I want to profit from that in the future. Kind of investment thing. It's not a bailout, okay? So not financial distress. I need to stress that, because the shorts will say, look, NIO is cash strapped, they need liquidity and so on. That's not the case. So in fact, the truth is actually, while this is not changing anything with the shareholdership of NIO, the ADR that we are investing in, it's also not changing something with the balance sheet in terms of the cash resources that NIO has, because they're not raising USD here, right? They're raising local currency RMB in China in this other entity, which is part of the holding, okay? But here's another reason why I think this will actually not benefit the shorts narrative, but actually hurt it, because with these proceeds, they will be able to fund local operations in China. So they have now raised, 3.3 billion RMB, which is roughly 400 million USD. And they can use that in their daily business for operations, for R&D, for paying wages, for opening new stores, for onboard stores and whatever. That local money can now be used. And therefore, I expect actually the US resources here to not decline as fast as they maybe have in the past, because they have now some local funding which they just raised, which can be used, and therefore they don't need to tap into those cash resources which are USD denominated. That's my personal interpretation, and it has maybe also something to do now with the change that we see with the Fed cuts. So now the US dollar has lost some of its strength. Interest rates are going down in the US. China is putting liquidity in the market, as I've said. The renminbi might actually appreciate, so going higher. And maybe now it's just a better time to raise cash in China and use the cash in China instead of issuing shares or raising cash in the US and converting it into RMB and using it that way. So ultimately, the outcome, in my opinion, is a strengthening operational Chinese entity and with better funding there. And this might be one way to, how the stock market could interpret it tomorrow. Because, this might actually first of all, as I said, it's not delusional to the US entity. And second of all, it may actually improve the overall sentiment of how the company can operationally succeed going forward. And it's putting out some of the fears about imminent USD cash raises, in my opinion. But that's speculative. I don't know if the market will react like that. One instance that we have that we can refer to actually is what happened with NIO Power. So again, if I go here into this chart, NIO Power is here, NIO Energy Investment and the Wuhan company. This company and entity, which is also offshore, but it's part of this whole holding structure, has raised, what was it, 207 million, so that was 1.5 billion RMB on May 31st. So they also got local investment back then. Back then I also made a video and said, look, this is going to help NIO Power to locally fund in RMB. And yeah, of course, there's now a new stakeholder on the cap table. However, it also is not dilutive to the ADRs, to the US ADRs. And what happened that day is actually that the stock opened at 536 USD and closed at 539. So it was slightly up, basically a neutral sentiment of that deal, which was very similar in structure to this announcement today. And so, you know, I don't know where the stock's going to go tomorrow. I mean, there might be macro factors as well. However, I'm just explaining here why I don't think that this is actually warranting any argument for the shorts here that, you know, this should be pushing down the stock price. It could still be taken, you know, as a negative. I mean, you can always have a bearish view on all of that, surely. But as I've explained, we've seen something similar happen on the 31st of May. Back then, people were just neutral, and I explained how I think, what is the motivation behind that, and why I think that this is actually, you know, not having an outcome on the shares outstanding in the company that we invest in, and how we could actually argue as a bullish view that this is operationally setting the company better up and may actually narrow even the cash drain in the reported USD resources in the next earnings reports. So we're gonna find out on Monday. I know this was a bit technical. I hope I explained it well. I'm sorry for that if it's you know, a little bit too tricky to explain, but I hope you appreciate it, and thanks for watching. See you in my next videos.